Audio test 1, 2. Good morning. Welcome to today's live stream for June the 24th of 2025. We got some nice price action. Morning, Caesar. We got some nice price action. And what I mean by nice price action is price hasn't ranged for all of London, which means that pre 9:30 and 9:30 should be clean. Yesterday, what we saw is before we start trading, you can see here on the left-hand side, we had this huge drop to the downside during London. And what did that do? It created insane amount of consolidation during the later session. Still tradable, but it was very difficult. Okay. Now, and again, like this is just like the drop lower, and then what happened all of yesterday, and then today we've opened up, and it wasn't that rangy, so that's good. You can see here in all of London, what did we do? We consolidated. AKJAWS or AKG. We consolidated during London, and just looking at price generally and the way you trade 9:30 is you squeeze your time frames on the 1 minute. You got to see where the equal highs and the equal lows have formed. There's really two levels here. Level 1 is above us. You can see here we got London highs. Okay, high, right? Nice little group of liquidity. We got Asia highs not touched from yesterday. And then below us, we've got all of these lows, right? Low, right? This grouping of lows which is seen as liquidity on the sell side. So two great levels. We're closer to the buy side here than to the sell side. I think ideally what I want to see after a drop like yesterday is coming back up, grabbing this buy side and then dropping lower and trying to target these sell side targets. So that's kind of my overall premise for the day. But it looks like, again, I don't think we're gonna not tag Asia highs before dropping lower. And again, like, do I see the other way? Price running down and then back up? Like, I think if it runs down, it's gonna run down. So that's my bias. And right now, looking at the 1 minute here, there's not much that has happened since London, but we've ultimately chopped around sideways. And finding structure in something like this might be difficult sometimes. And what I like doing is I like looking at specific PD arrays, as you guys know, like the 6 a.m. first presentation fair value gap is something I look at. So I draw that in. Okay. You can see we broke below, and then we broke above it. We used it as support, broke higher, and then broke higher. So to be honest, it might be a fair value gap that I might use. This green fair value gap is yesterday's first presentation fair value gap. You can see how price did respected in the past. Just generally, it's nothing. It's a really large fair value gap. It's how many points? It's 30. It's around 50 points, which is large. And then again, I'm looking for like intermediate buy side and sell side. So you can see here, this sell side here has been taken. We inverted, pushed up higher, grab this high. Now we're pushing back lower. But in terms of something super obvious, again, it's not super clear. We're going to be entering the macro soon. That was really stuffed. Apologies. We're going to be waiting for something a bit clear to take. But right now there's Not much happening. And then when I see this on the 1 minute, I move up. I look at the 2 minute here, right? Is there something obvious on the 2 minute? Negative, I just see nice ranges in Asia and then just consolidation here in London. Then I look at the 3 minute. 4 minute. Again, just looking for something that really stands out and it just pops out. Nothing. And then, okay, so it looks like that's where we're at from a lower time frame perspective. Not much clarity just because of this consolidation. So we have to see one of two things. We want to see price. We might not catch it, but kind of go up and take buy side liquidity and then see a reversal and try to catch that to the downside. That's move one. Or move two, we're going to see a move playing to the upside or to the downside without that being tagged first. So 3 possible scenarios. Now let me move over into my higher time frames here so we know what we're looking at. Okay. Very important that we're aligned from a higher time frame perspective. You're seeing 3 charts on the right hand side. We got the daily, the 15 minute, and the 5 minute at the bottom. I want you to focus on the daily here. Okay. Top left. Sorry, top right. So price moved lower, grabbed liquidity, came back higher. This is a daily, not a fair value gap. It's more of a, yeah, it's a fair value gap actually, with like a built-in new week opening gap, but it's a fair value gap from this body's high. There's a gap there to this body's low. And I pushed this over and I quadrated it out. So you can see these lines here on the 1 minute. Okay, so the green lines that you'll see, that's this. Okay. And technically, let me invert this so that 0 is on the bottom and 1 is on the top. Suspension block. Thank you. Suspension blocks. Josh is right. This is a suspension block. Thank you for that. So we got a suspension block right here on the daily. And then if we move down to the 1 hour, again, just looking for more clues here. What can we tee off of? You know, in terms of, you know, long short. But you can see interim. What are we targeting? Smooth highs here on the 1 hour and all of these smooth lows on the 1 hour. But we're below the mean threshold of the suspension block on the daily perspective. We're above midnight open right now. But again, we do want to see how it's going to be respecting these levels. And you can see here, it kind of broke below. It kind of stood between the mean threshold of the suspension block and the low end. And then eventually it broke lower. And again, it's kind of sitting in the lower half right now. It's really hugging that lower quadrant there. That's something that I'm watching. But again, like we do need to see some kind of movement out of this consolidation that we're having here over these last 6 hours. Get a clear direction. But there's liquidity above us and below us. We just have to get a bit more information from the market. Sometimes I go down a bit lower and I go into the 15 minute. This is my favorite chart. But it really kind of shows you session liquidity, right? With a bit more detail of something that the 1 hour doesn't give you, highs and lows. Okay. So here we got some this is liquidity that I like, right? Like this purple line here is Asia highs, Asia liquidity. This is the yellow line is London liquidity. And then below we have all of this, you know, these are relative equal lows here. So we got opposing side liquidity. Both are looking great. And one other piece of information is we got this here. This area right here. And I'm going to label this as purple. And I'm going to label this as, I don't want to extend this to the right. This is going to be the RTH gap from 623 unfilled. So yesterday we had an RTH gap, a really large one. It was huge. We only filled bottom half of it, like the first quadrant. Like it's this green box right here. And we decided to stay on the lower half after this huge precipitous drop from London. So price, it's going to want to fill this gap here from an RTH perspective. If I change the charts to regular trading hours, this is what it's looking like. There's this huge gap here, and we haven't filled it at all. So remember, price is one of two things. It hunts inefficiency, which this is inefficient from, or it seeks liquidity. Okay. So this is something I want you to think about as well. And it's something price should fill in the future, right? Is it going to be today? Maybe. Is it going to be another day? Maybe, right? But it's just something that it's going to be on my charts for the next little while, this unfilled area. And during regular trading hours, it should fill. Yeah, like look at this RTH right here. You know, technically, it wasn't filled during regular trading hours, but London did fill it here. So again, looking at this area here. All right, so that's the 15-minute. To be honest, good thing I looked at the 3-minute because that unfilled RTH gap is, I think, a key piece of information that we might be using in the near future. So for those that are on the stream, you guys know what I'm at. Any questions from anyone? Oh, I got a couple. Also, when you fib the Asia range, that 0.5 is exactly where the New York AM high is. I'm gonna take what you said and do real time here. When you fib the Asia range, okay, when I fib the Asia range, so from 7 all the way till midnight, that's my Asia range. Negative 0.5 is where the, yeah, you're right. Exactly. That's crazy. Yeah, good finding there, Martin. That's really interesting. So ultimately, if you take the range from Asia, from today's session, and you basically move it up above it to see where price was trading relative to it, you can see the New York highs from yesterday was exactly at mean threshold. Sorry, not mean threshold. Negative 0.5 Fibonacci extension from it. So interesting. Cool finding. Again, another proof that the market maybe isn't so random. Maybe there is an algorithm that's just printing money. Okay. So that we talked about the 1 hour, the daily. I don't look at the 1 hour really, very rarely, but for me, the 15-minute, I'm constantly glancing at it every 15 minutes. And 5-minute gives me a bit more higher level structure. Here's ES. Similar story. Like we got crazy buy side above us, right? And I'm gonna scrunch it. Just look at the general flow of it, right? You don't have to see individual candles, just the black lines I'm creating right now. But like that's buy side. All this is sell side, and we're right there. So do I know with 100% confidence that I know which direction it's going to go? No, but if I can create some bias to one of these, again, they're two good targets. The question is it going to go there first? ICT always says if there's two of these, wait for one to be taken, then take the other. But yeah, I think sometimes we can guess with a bit more precision of where it's going to go. But again, if you're starting off, I'll probably wait for one of these to be taken. So on the ES side, again, even though this low here took out this low, I still see this as relative equal lows. For me, a body has to close below this low here for that to be a proper liquidity sweep. We got relative equal lows here. Let's take our eyeball, add it here. We got relative equal highs above us. Again, we'll just keep it simple. Relative equal highs. This is relative equal lows. Small typo here from my. All right, analysis done, guys. 5 minutes. All of you should know roughly what to expect. Now we're going to hide it. Hide this. Not hide it, but at least kind of look at how price is printing. And looking at price right now on NQ, which is on the left-hand side here. Price went down to mean threshold of yesterday's new first presentation fair value gap. Nice expansion higher. This is the 7 o'clock candle. I am liking these overall highs. I think this is like an easier high to grab. Like this would be like the low hanging fruit. Going down to first presentation at 6 a.m. too. Interesting. Consolidated, reversed here. If you were to take a hypothetical long off of this, because of just kind of retracement here, filling in this range gap. If there would be a gap, we'll see. I'm taking the highs. That might be, an okay trade, nothing crazy. Definitely like around 50% strike rate if it were to happen. If it does, got that 3-to-1 RR. But I need to wait for a bit more here because it's very rangy. I'm going to be assuming that we're going to break out. So right now we're just watching. See something very obvious in the market. We've displaced higher here. We create this set first fair value gap at 7 a.m. Okay. So you'll see this fair value gap having a bit more weight than the others. I'll be trading probably around 3 micros here. And you can see their sensitivity at the 0.25 quadrant of the daily suspension block. You can see the bodies here closing above, below. Again, not loving anything right now. When it comes to using high probability fair value gaps, fair value gaps actually sit on these quadrants here. So you can look through all of London to see if something formed. Like for example, this right here would be considered a high probability fair value gap. Right? And I'm just looking at how we're respecting. And it looks like it's either respecting this fib or this fair value gap here, but you can see here, price is definitely bouncing up, bodies are staying above this. It breaks below, all the bodies are staying within it, collapse lower, and then here, get a bit of, wishy-washy price action where the bodies are closing above, but directly right into it. Then here again. So you can see this fair value gap, it creates some kind of structure or logic in the past. That's kind of finding fair value gaps that sit on quadrants. You try finding some more, to be honest, out of all the ones I see, that's the only one that sits on a quadrant. This one as well. This also sits on the quadrant as well. Got one more right there. Oh, let's see here. There's an indicator that builds in Asia standard deviations. You check it out. I don't use Asia deviation. So I've never they're great guys. I just personally haven't found it to add confluence to my trading Asia standard deviations. I just trade Asia highs and lows and not how far we're gonna I'm gonna have to listen to some ICT lecture where it tells me good targets for pre 930 are going to be using IE Asia standard deviations, and this is how you use them, create some kind of solid structure around it. I just don't have right now anything. that's going to support it. Like I'm cognizant of it. It's just adding value to my trades of how it trades. I wouldn't, know how to implement it correctly. Just being honest here. I use deviations from like the first 1 hour opening range. So like when we take 930, for example, I'll show you guys an example here while price is still, but like when we open, so here's yesterday's open. I tagged the first high and low of the first 30 minutes. Okay. So 30 minutes, 1030. Here is 1030. Okay. And sometimes when we peak below it or above it, that's our sign that it's going to be a trending day. And look what it did. It only took out the low right here at 230. And sometimes what you do is you grab that first presentation fair value gap that forms after it. To be honest, it might be right there, but you can see here, like it was a range day because we stood in this 1 hour range. And what I do sometimes is I basically extend it out and I start targeting the 0.5 and the full one when it comes to longs or shorts, understanding that it's going to be a ranging day to that specific side. So that's what I use when it comes to like Fibonacci extensions. It looks like Martin uses extension opening range from 12. So you use the midnight opening range. That's a decent one. I have to rewatch that video from ICT. It's been a long time. But yeah, midnight opening range. So here would be this, right? And then you can grab your standard deviations from here. Right now we've traded to technically just over one standard deviation from the midnight open. And sometimes you can grab the first presentation after midnight, which is going to be, I think it's going to be this one, to be honest. Why? Because we displaced into a new low. Like that's first presentation for me. So let's add it here. And we're going to study it together real time. Okay. So this is first presentation after midnight. Okay. So remember, again, ICT has crazy rules around this, but it's not going to be this one because we're not really displacing anywhere. It's not going to be this one because we haven't tagged any lows. It's going to be this one right here. That's first presentation. All right. So I'm going to get rid of the opening range. We're not going to be using this, just that fair value gap. All right. And you can see this high probability fair value gap here. Again, I'm not loving how many times we've hit it because we're consolidating, but again, it's nice to see that price went into it, body stayed within it, pushed lower. And now we're sitting in this like New York first presentation fair value gap. And we're consolidating, guys. Fortunately, we're still in the consolidation. Hopefully we break out of it and then we'll trade with it, but until then we have to wait. Martin looks for OB or fair value up on those lines. Both sides, we have equal high and equal low. Yep. RTG from Thursday, 11th June is where we bounced at 7 a.m. RTA gap from June, from the 11th. Oh, you're looking all the way back there, eh? 11th. The reason why I'm a bit skeptical about going back so far is because we had the contract change. Remember, we went from M to U. And on my charts, it's all a bit funny. So price usually jumps 300. So that's why based on ICT's teachings, you should only go back 3 days of RTH gaps and use those for current day trading. That's what he said. So Josh, when you go back down to the 11th, that's definitely like almost 2 weeks back. So it's cool that it bounced, but you're using a previous contract, which the prices might be off. It just might be complete random, but I'll probably say, again, just based on what I know from ICT, last three RTH gaps, that's all we can really use. That's what I use. We are still in consolidation. Technically, this high, it just grabbed like this interim minor buy side liquidity high. I turned around. There was like an IPG here, but like, would I trade that? No, never. Like, I wouldn't go like short here, knowing that we just bounced off of the mean threshold of yesterday's first presentation. We sliced through it. Now we're on the bottom half of it. New day opening gap. This is like a, it definitely made price bounce off of it multiple times. So nothing tradable right now, in my opinion. What do you guys think? Like, are we going long? Are we going short? Because I'm sidelined until I see a bit more. But I really hope we grab the liquidity above us before we start driving below. RTH gap, what is it going to look like today? We opened up here. So it's going to be fairly, like, assuming we open up here, it's going to be a very small one of a couple of points. So we opened up essentially at 29,750. Gold is dropping, looks good for long. Nice. Martin is long. Yeah, I'm hoping for long. But if it shows us shorts, I'm going to go short. But you can see here again. ES right now is exactly between the highs and the lows. We dropped some fib. We're exactly at 0.5 right now. So pick your poison, EQ. Yes. I'm max on gold. I don't trade gold. I used to. I became like a NQ purist for the longest while. And then I decided to look at ES. And I realized that having ES and NQ is a huge benefit. Like having both of these on your charts is huge. Initially, I didn't want to. I'm like, it's too much data. But definitely a good thing. Technically we had these relative equal lows that we created. But again, it gets messy because of this first presentation from yesterday, which is a very strong PD array that I usually use for next day trading. But it kind of, it bounced off a mean threshold, came up, went into this high probability fair value gap. Again, all the body just standing within it, drops lower, grabs the sell side. We got London lows right below us. That's that little wick there. First presentation of 7 o'clock, just slice right below it. Again, nothing really tradable here. Now we're going to be watching how it's going to be acting at the new day opening gap. If it's going to want to take London lows here, or if it's just going to bounce around some more. Right? Just do this. You can do just weird stuff like that. And if a long word to be taken, like you have to have full confidence that it's just going to blast through all these levels. And have conviction that like where your stop loss is, like it's not going to get tagged. And right now, is there a level here that I have a stop loss that would ultimately protect me from a long? Right, we're going to take some levels here from Asia, from London. This might be an interesting fair value gap. This one I liked as well. Here's some fair value gaps that we'll be pulling. What else do I have here? This one was interesting too. We'll pull that one later on. And this one I'm not too crazy about, so we can delete that. It wasn't even, it was a fair value, but it was a sloppy one. It was a somewhat of a suspension block, but it was missing the gap on the bottom side. So those are the levels that I see that might affect price here. And again, zooming out, I'm looking at the 50-minute right now. Again, not really showing me much. 1 hour, it's still kind of not showing me much. And then the 5-minute, again, not showing me much. So we're just looking to see what price is doing right now on the 1 minute. Price right now broke below from a body perspective yesterday's first presentation after 9:30. Upper half of new day opening gap here. Or we could get like a close below it, seeing it come back up, and then just taking it to first presentation after midnight. Idea one here. What is this here? All right, we got the low of the daily suspension block right here that we'll have to trade through if that were to be an idea. But again, I'm just putting it here. I'm just creating an idea from our perspective. I don't see a trade idea yet. It's just, if price were to do that, and then if it were to reject it, what would my entry look like? We're not going to be taking half-ass positions today. Gonna have these in clean. The 1 minute here, just looking at the bodies, it touched, this displacement fair value gap, which price used on the upside. We just took out London lows, so liquidity. ES had these relative equal lows here. ES didn't even grab London lows yet, so there's a crazy amount of SMT right now. See? So right now they are not moving in sync. So what's heavier? NQ is heavier, and ES is more bullish. Using these relative points as an indication. Taking a short from here too. Again, you're gonna have to wait for someone to pull back because we're already in a move lower since here, right? Like this is the leg. Price usually retraces on leg, right? So if you're planning a short from here, you just have to be certain that it's gonna, and I'm not taking a short from here, that it's not gonna retrace here higher and then pull lower once more. So right now it touched this fair value gap here. It looks like bodies are staying within the new day opening gap. Technically, this is an IFEG here. So liquidity swept, high probability fair value gap, which is a new day opening gap. And for example, that's interesting, kind of. But again, like, what are you trading into? First presentation, bearish order flow delivery. We closed above this IFVG here. I'm gonna. This is a lot of negative, right? So like this is a possible idea. There's some things against it, but there's a lot of negatives to like a trade like this. 7-1. Let's see how this candle here is going to close. If we're going to maintain above the new day opening gap and above this IFVG that we used the downside to basically close London lows. Maybe 50% risk. And then again, but like we're gonna have to see price here really respect the mean threshold of the new day opening gap. And I don't want a body to close below this IFEG right here. Right. That's what I'm seeing as like a possible move, assuming it's going to go up, which it could keep printing down. So that is not nice. Okay. So that didn't validate that IFEG for me. If that body closed there, that would have been a lot nicer. So this I'm not liking anymore at all. Again, like we're at an area where price can go either up or down. There's just there's buy side above us and sell side below us. It's 50-50 here. Okay. So this one candle print showed us pushed higher, hit the top of the first presentation for value gap, dropped lower now. If it drops below this, is it going to retrace and then drop the first presentation? And it looks like it might actually be hunting these lows. I personally wouldn't have shorted right there. That wouldn't have been enough. And just seeing how it's going to respect. If it's going to close your creative fair value gap, come back up and just show us that it doesn't want to close above these levels. You know, having a stop loss like that might make sense. You know, targeting these lows, I don't think it's going to do something like that. Anyways, it's going to be hard to get a 2-to-1 here. The first presentation, we're also going to be trading into the Civi low here. Exact high. Yeah, and there's also the high of the, so we just broke into the midnight range. All right, midnight range. We're gonna draw you out here. We're trading into it. All right, that's the midnight range. So we're trading into it right now. This fair value gap here sits on the top of the midnight range, which is nice. There's a fair value gap right here. If price maintains this, it might push lower. If it overshoots it, goes above it, and it starts closing on the higher end of the new day opening gap, it might seek higher prices. So this body closed within it. He opened up above mean threshold. Again, this is like, is this going to validate the IFEG going into the high of the range of the of the midnight open and then push higher? Maybe. Again, I'm so split right now on longs and shorts here. So I'm just looking to see what price is giving us right now, interim real time. Seeing if I can get in small. Like what? Assuming it like if it gets above, you know, the upper half of the new dog, and I take the long, I'll just have to eat the risk of it breaking through it all the way to the high here. Okay. Body's still staying within this bearish value gap. Are we in a macro? No, we're not. This is going to be a change of state and delivery once we break these highs. And then low sweep, 1, 2, the Mike Tyson 1, 2. Huh. All right. I'm going to see how we close here. Ten seconds, we're closing. much negative confluence here. I'm going to take a 50% long here. Stop loss. All right. So this is this is how I'm thinking, what the market's going to do here. There's a lot of negative confluence here. Don't get me wrong. But I'm assuming that we grabbed the low of London. We went once below it, twice below it. We inverted this IFEG to the upside. We just had a change of delivery. We broke these highs of the last swing low. We're trading in the upper half of the new day opening gap. Big negative confluence would be this New York first presentation fair value gap. Maybe once it gets the mean threshold, I go to break even if price does that. Right now I'm at 50% risk for this possible long. Again, trying to catch the bottom here. There's no confirmation here to the upside. But again, just using this general delivery here on the 1 minute with buy side and sell side below us. Again, I'm picking a side here of where it might go first. It might completely start melting below. But again, if it closes above and retraces, I'll start scaling into that position. But again, it allows me to get in. And I'll see if this initial 1 minute structure, with very little confluence, will be pushing to the upside. Hence a small opening position here. My sell stop is right below this bullish order block that formed to the downside. Again, London's have not been grabbed by ES. Could it go there? Yes. I'm looking at that SMT there. And that's my confluence stack here for both of these, for this long here. I don't like how this immediate candle just dropped back in after we close in the upper half of the new day opening gap. But I'd probably rate this as right now it's like a C+ entry or overall bias. And then once it starts breaking, hopefully the rates go up because of quality of the entry here. Entering at 50% risk here. We had a large leg lower, IFEG inversal. We had a fair value up sit on the upper half of the midnight opening range. We touched, there it is, there's opening midnight price, and we rejected it, and my stop loss is below it. So there's a lot here supporting it, but there's also a couple of things that we're going to have to push through here for the upside. So discretionary. You've done your damage to the downside. Is there more damage I can do? If it does, it's down here. So let's see how this 1 minute here is going to close. So close in the upper half of the new day opening gap here. So far the bodies are staying in this range. I want to see a break above here. We technically never broke above it. I thought we would on that candle. We didn't. This IVG here, once it breaks to the downside, trade's over. Moving my stop loss to below the low of this inversion here. So I'm shaving off a bit more. Initially, our stop was down there. So 25% reduction of position size. Where do we get it? Right there, right? Asia highs is going to be my target. So selling 3 there. Again, there's still, like, even though we had that like little push up higher here, there's still a lot here that price has to push through. So sell stop can be dropped below. I'm dropping it below the lowest swing low here, which is this right here, and below the mean threshold of this IFEG here. My risk is almost at 50%. Moving it a bit higher here, just below the new dog low. And this expansion candle here, once we get below this, it's not a trade that you'd want to be in. Moving my stop loss below the body of this bullish order block before they push the upside. I'm looking at mean threshold here. This level right here, it might reject price and we might drop lower. But all I'm doing right now is I'm just letting price go and I'm just trying to shave off as much as I can from a risk perspective. Like, where's my break even, right? It's probably once we tag this fair value gap here, it's the first one, I'll probably go to break even. It should have gone to break even, but it hurt me a lot catching the low and price just ramming close to the TP. So there you go. Price here is, what's my open risk right now? How many points? 11. $60. Pennies. So confidence of it going up all the way, like, we'll see. I'm participating in the position. Is this one of the positions here that I have full confidence in that it's going to hit here? I don't, but it could. There's things pointing to it. If we get above the mean threshold of this first presentation, my confidence factor goes up, right? But we have to kind of break this line right here. It's very important. And once we do, I'm seeing slight weakness in this overall PD array. And then hopefully price breaks above it, uses it as support, gets above this blue area. Like, once we're above this blue box here, high chance of it going to these highs. Okay, that's our high probability fair value gap. And we're targeting these highs. And what we're going to do on ES is we're going to create a little alert here. When it hits there, we're out regardless of where NQ is. So let's see when we're like higher here, and then I'll go to break even. Are we in a macro? We're not, which is nice to see this PA outside of macro, but in 15 minutes we will be, and maybe that might be the final push to get to these highs. Oh, is my copy trader working? It is. Okay. I'm using a new trade copier. I've been using Tradesyncer for like the last, I don't know, year. I heard about something called Tradecopia. It's desktop based. It's not web based. At least the cheapest plan isn't. It's 50% of Tradecopia, which is great. It's $50 a month. I am affiliated with them as of yesterday. They gave me a code. I think it gives you 30% off either your first month or every single month that you pay for their subscription. So again, feel free to check that out. If you're trading more than one account, Tradecopia, honestly, it's faster than Tradesyncer. It's cheaper than Tradesyncer. The only drawdown is it's sitting on your desktop. I don't know if it works on MacBook. I don't know. But if you're on a PC, it works really well. I haven't had crazy slippage. The difference between my main account and my followers is minimal. It's like $20 over like 100 trades, let's call it, including scale in and scale outs. So that's, I think, my new recommendation. Not so much Tradesyncer anymore, but Tradecopia. All right. We're attempting to break above a mean threshold. I'm going to move my stop loss to below this fair value gap here. If it gets here, ID is wrong, right? It's going to hit first presentation after 7 o'clock right now. If this hits, that should be around $100 in profit per account. Maybe it's going to be the upside that gets targeted first. All right. I'm definitely moving to break even with some profits here, even below this bullish order block here. Whatever that is, a couple of bucks locked in here. I wonder if this came out here. Let's see. That was an interesting jump at 737. I'm seeing speed and direction here to the upside. Let's just see it continue. Bodies. So this blue box here, or these blue boxes, area of the high probability fair value gap, just because it's sitting on a mean threshold, or wrong. It's sitting on a quadrant level of the SIBI. Oh my gosh, suspension block. Sorry guys, still tired and had a really bad sleep yesterday. And now my stop loss is, let's move this here. So we're below the mean threshold. We're below this entire expansion here to the upside. And like, think about it. Like, if price were to come all the way back down here, would we be interested in a long? I wouldn't. So like, whatever, stop me out at a couple bucks. We're right now above first presentation, which is nice. I just need to see this blue box break here. Now let me cycle through what the 2-minute looks like, 3-minute looks like, the 4-minute looks like, the 5-minute looks like. Still really, if you look at the price action overall, like, this is, like, look at it. We're still technically in like this like consolidation zone. So at this point, we're just going to have to let it go and see what it wants to do. We can only do two things: just control your stop loss and control your profit target. That's it. I think you can do whatever it wants. Price is moving into this. It broke through first presentation after 7 o'clock. It's going into this fair value gap right here. Like, for it to get to this price, it has to break this fair value gap, break this fair value gap, break the mean threshold of yesterday's New York first presentation. This 1 minute order block, it has to break as well. Like this is an OB, a really strong OB. Right, it has to do a lot of things. And we can even have it here on the high. And then once it hits that, right? ES almost hit this level. It was so close. It created more relative equal highs above it. So all NQ did is it took out this high here, definitely more bullish. Yeah, ES definitely had a nicer pump than NQ. All right, so I want to see this fair value gap here hold. It's sitting at mean threshold of yesterday's first presentation fair value gap. Let's do this here. Do I scale in? No, we'll leave it. We'll leave it as. This pullback could have been used as a scaling opportunity for a fatter payout, but I'll leave it as is. Again, the upside, I think it's going to go higher than lower based on what we've done right now. We broke above it. Again, I want to clear this blue fair value gap here. You can see how many times price just bounced off of it. So once we clear this to the upside, then I think it's a clean trade higher. If you guys are learning something, feel free to drop a like. That's my acknowledgement that you guys are getting something out of the stream. Appreciate it, as always. And yeah, no problem, Furby. Well, hey, it's not a nice trade yet. It's just a trade. It becomes nice when we hit profit. It goes back and tags us out for whatever this is. Not a nice trade. Bad NQ. Bad. Yeah. Oh, thanks, Tony. Yeah, always, like I've made no money on Monday. I made no money on Tuesday. I'm hoping today, like this week has been really dry for me. I'm happy that I'm at break even and not in drawdown, but still it's frustrating. I didn't trade Friday. Like 3 trading days go by and you're nowhere closer to your payout than you were before the holidays. So, you just got to stay composed. Yesterday I got greedy. I'm gonna admit I went really aggressive. I took a lot of trades, and at the end I just broke even. And I'm like, that was a lot of effort for nothing. Like the moment you start thinking like, oh, if this trade just hits profit, oh, I'm only gonna be $1,000 away from my next 6K payout. You can't think that way. You have to trade the price action and completely ignore your prop firm numbers. Whatever they say, it doesn't matter, and that's very hard to do. Oh, yesterday was extremely tough. Yeah, I hope so. I think so. Remember, if ES hits these highs here, right, my little small screen on the right-hand side, you have 2 options. You're either doing ultra aggressive stop loss management and just hope NQ keeps pushing up, or you close your position. You have one or the other. So we'll make that call once we get up here. I really hope. Like, for example, yeah, we'll see. We'll see where we're at. You can see here, like all of these relative equal highs above us. So we tag this, and then we We go to the downside. But remember, we also have the RTH gap from yesterday that was unfilled. That's a bonus. A lot of bonus. Yep. ADM volume could push to the target. Yeah, it could. Macro in 5 minutes, guys. But that negative 0.5 standard deviation. So what is that a standard deviation of Martin, that negative 0.5? Like, what are you talking about right now? From Asia. Oh, okay. Oh, right. So yeah, okay, got it. This is going to be almost a 4-to-1, guys, if it hits. Big position. And the thing, I'm going to be honest here, the thing that keeps me profitable on the upside is these big positions here and just having the guts to hold them. And not closing them when it's like 1-to-1. Like, don't do it, guys. If there's probability and possibility to higher RR, try to manage that stop loss. Because when NQ decides to turn on its run program, it just runs. And you make up for your losses. And believe it or not, holding winners, that's what keeps me profitable. Even though sometimes it hurts, it keeps your strike rate a bit lower. It allows for more mistakes. Like, am I getting uncomfortable right now? I am. I'm being honest. I'm uncomfortable here with what price is doing and not breaking. But we're trading the plan. We're trading the best I can in terms of risk management here. I think my stop loss is at a decent position. Can it be lower? Yeah, it's 100% it could be lower. It could be at this fair value gap here, but I wouldn't want to see it get that low. Because that means like we would have this V-shaped reversal here. Like it could do that. It could tag me out like it has many times on stream and then it pushes to target. But that's where I'm placed. Like that's where I'm paying my stop loss to do its work. Like where would that be for ES? Below this bullish order block here. So we'll see. It just needs to break this stupid level here. So this is like next, like this is like final boss, guys. Once it breaks this, the trade's over. Like the trade's over to the upside. Like it's running. ICT tweeted. Let's see. Oh, I never got the notification. Today's headlines, June 7th of 2026. I detailed this for you in advance. See this guy's right here. If we close above, I'm trailing. Gold falls below 4,000. Silver drops over 4%. The recent decline followed a stronger US. Sorry, guys. Okay, equal highs taken right now. I'll read ICT's tweet in a sec here. So this is what we can do. We can scale off one here. All right, one scaled off just because ES took its highs. We're moving down to 30-second here. I'm just doing some 1 minute trailing here. 15-second trailing. I lied. Let's go. I just don't want to get stopped out here. Here, I'll have my stop loss below here. You know what's easy but better than 1 minute trailing? Another scale out right there. I have 2 scale outs right before my target. Last one. Below the high probability fair value gap. We're in the macro right now. Bit higher, NQ. Like you're so close to your target. Why wouldn't you hit it? $15-minute fair value up here to the upside. Let's go back to the 1 minute here. be honest. I'll have my stop loss below this 1 minute body here. So I'll do 1 minute trailing at this point. Right now we're at what? What's my profit right now? That's currently open 160. So it's either like 100 or like 220. So there's $100 in possible profits that I can take here. But anyways, let's see what ICT is saying here. One minute fair value up here. I don't want to see this broken. There's way too much bullish PA. I want to just see it bounce off and go higher. I'll leave my stop loss there. Do we leave a runner? Actually, hold on. Okay, so yeah, so ES took out London highs. NQ hasn't. Here are my execution marks here so you guys can see exactly the levels that I got in at. So basically all ICT said is that gold is basically shitting itself and silver is as well. So what's the correlation between gold and NQ? Believe it or not, I think they're negatively correlated. NQ to gold correlation. I just want to see what the percentage there is. There was this really cool website back in the day I used for correlation. All right, moving my stop loss to below this bullish order block here. At this point, it's going to be here or here. It's close, eh? Or even below this low here, maybe. There you go. It's like there's the consensus there. Yeah. Come on, just hit the TP, not the stop loss. All right, I'm out, guys. All right, this is the trade. Insane trade. That was 550 per account. Maybe I should have left my stop loss there. Maybe, whatever. My management could have been better up here. I always, and I'm being honest here, I kind of start freaking out because I have so much pain in the past when price almost gets to my target and the reverses. I have a lot of pain around there. That's why you see me fumble a bit when it comes to managing my stop loss very close to my target. So feel free to ignore my management really close to TPs. I know it's not ideal. I'm working on it. See, look at that. It just pushed a bit deeper into this 1 minute fair value gap. And there's going to be the drive higher. Oh. Be honest, I could have made an extra $100 there, maybe 50. I think so. Like roughly $50 here. Missed out per account, and that's 8 accounts. All right, guys. Thank you, Kevin. Thank you, Martin. Hopefully you guys, the entry was sketchy as shit. Don't get me wrong. It's just, there was like 5 confluence factors and there was a lot against us. But the assumption is if the low is formed, it's going to be here. We might be wrong, but it's a 4-to-1 and let's take that risk. And that's all it is, guys. We're just risk takers and profit just got tagged right there. It would have. But anyways, does anyone know a website where I can compare the specific correlation NQ to gold? NQ to gold correlation. I'm just trying to find something real, like with real data behind it. I don't want to go on Reddit and some guy say, yo, they're inversely correlated. I don't know. Good recovery from yesterday. Thanks, Carlos. All right. So that's the trade. Have these highs been taken? Yeah. See, so look at NQ. Like bodies haven't really closed above this level yet. So it hit it. It never closed. But there you go. We can remove that there. And now we wait for the next trade. we'll see. Like for me to go short, I need to see a bit more damage here to the upside. And then also like we have like the untraded gap from yesterday. To be honest, when ICT tweets and he gives ideas, usually those make me lose money. That's why I kind of try ignoring his tweets during trading. It's hard to because he's such a good trader. And every time he's like, look at these levels right away, is want to like long into those levels without waiting for something significant. So watch out for that, guys. So C plus entry, it cleared up a bit. Once it broke above mean threshold and above this, I told you it was going to be a clean trade. Like the moment it breaks this, I told you it's GG for price. And it did that actually, just pushed straight up. All right. So now we wait, guys. We wait for the next opportunity, which I'm looking at shorts. I want to see Asia here get tagged, London here get tagged. We'll see. We'll give price. Let me just call it a short live stream today, but we'll see. Give it a bit more time. We're in the macro right now of 8 o'clock. All right, price. What you want to do? ES murdered these highs. Look at ES's chart here for a sec. Or the 5 minute. Again, I'm having things scrunched here so you guys can see, but this is how I figure out like what price wants to do. So we had all these smooth highs here. Look what's below us. Like, look at this. Low, 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 low. All these lows, none of them have been tagged. Isn't that interesting? So I think there's some really nice shorts in the future. Like, I don't think we're going to leave this. We also have this right here, this RTH gap that's unfilled. Maybe like idea one, we push to it and we fill some of it and we push lower. Idea two would be we leave it and we drop lower. And then this is going to be upside targets once we find the low of NQ, and it's going to start drilling for this untapped RTH to regular trading hours. That's idea two. But I don't. But then right now I just don't know like what it's going to do at this point. See, like even though like we didn't know what price was going to do, we found some hints and we're like it might do this, and we took the trade. So. But you have to have that idea of like where price wants to go. Like you have to have that draw, guys. If there's no draw, then don't trade. Yeah, so London highs not touched. We took out these relative equal highs. We got Asia highs above us. All of these highs. Like, look at this right here. Like, this is my degenerate trading yesterday. This was my final trade of the day that I took. That put me back into break even. But look at this. Again, I'm just being transparent here. I tried to long this. Okay. And then I tried to short it. I broke even. I tried to short it here. Took me out there. I tried to short it here. Took me out there. I break even. I tried to short it there. It took me out of break even. If I just held my initial position here and I took a short here off of, this is the first presentation after 130. We broke above it. We broke below it. I went short. If I just, and I had my stop loss right here. If I just held this, oh, and this is where it took me out right there. But if I just held this to the downside, it would have been a huge position. But this is me trying to catch this short like 5 times. And because I was already in drawdown, my stop loss management, it wasn't correct. I was trailing too tight and I let nothing breathe. And if I let any of these like 3 trades short here breathe, like this was trade 1 here. Where did I enter? I entered here and then I also scaled in, but it was like something like this. It took me out for break even. So that was trade 1. Trade 2, once we broke mean threshold of first presentation, I went short. And it took me out right there, break even. Or something like that. It was some break even trade here. And then eventually I managed to get in again and finally hit my target. So degenerate trading yesterday. It was very difficult. My mindset was off after the live stream. I'm being honest with you guys. And sometimes a good night rest, it resets you. All right, so price right now is, what is it doing? If you guys, is anyone here still holding this position long? But if you are, I'd probably put my stop loss below this wick low here. Like it went into this fair value gap here on the expansion. And I would hope at this point that it would continue climbing higher. Like this here, I don't want to see any bodies close. Like see how nice this fair value gap is? Look at the bodies. It should keep going higher. But this is right now like my invalidation fair value gap, right? Is there news today? So maybe let's do this, guys. There's no news today. And then when it comes to the open, the RTH gap is going to be from this point. So right, like if you're to open right now, it'd be a 100-point RTH gap. If it's really small, like within 20 points, don't trade the first 30 minutes. Like make that a rule. Like if RTH gap is relatively small, and I mean relative based on like our ranges, like if it's tiny, if it looks small, don't trade the first 30 minutes. It's most likely going to be high resistance trading and trade after 10 o'clock. Okay. Write that down. That's an ICT rule. That's not my rule. So we'll see where we open up in terms of 930. I'm liking how these bodies are still staying above this fair value gap here. Once we close below, like, is that going to be the push lower? In my opinion, I would say no. And the reason why is even though ES took out its highs and NQ hasn't, this liquidity right here, it's scary liquidity. Okay. High. Like there's so many highs that haven't been touched. They're all relatively equal. So if I were to be going short and if I were to find something to create a bias to go short, i.e., price pushes higher today, it takes out all these highs here. You're going to have 2 options. Is price going to grab this RTH gap? Maybe, it might not. Or if you see a reversal happening before you're taking it, then that's going to, like, I probably want to see London highs being taken yesterday. So that's what I'm currently seeing. But we'll see if we get a little scalp here in the near future. I think I'm going to be still aiming for the upside here. just because of this liquidity that I see here. If price like dips below, again, you have to be very flexible with your bias. And here we're actually looking at shorts, remember, until we're like, let's see if it's going to invert this IFEG. It didn't, and then eventually did. You have to be flexible with your bias. And again, it's like here, like it's are we going to use this after this long leg higher? Is it going to be this tiny this retracement with an additional push? Maybe. But the moment this breaks the downside, I think we're going to go a lot deeper. You might go to first presentation. Again, always have like these like what if scenarios. If not this, then that. If not this, then that. Sometimes you can create these scenarios way in advance when price isn't in crazy consolidation here, like it was. But because it's consolidating, and we're still in the consolidation zone from London, you have to be ultra flexible with your bias. So I think today, guys, if you read it similar to what I did, I think you did a decent job of reading it. I think I did a decent job of reading price action. But I think this is still a difficult PA to navigate. This is not clean. Right? Body's still staying above this. And again, it's a fair value gap, but let's see if it sits on a quadrant. It doesn't. It's not sitting on the daily quadrant. Which fair value gap did I use as inversion? The one that's sitting on, and thank you, Martin, for this. He put my eyes towards the opening range gap from 12 to 1230. If you put quadrants on that, and if a fair value gap sits on these quadrants, it's considered high probability, okay? So this fair value gap here, it sits on the quadrant. If all of you here want to increase your strike rate by a significant amount, you're going to have to be more patient. But if you only take trades off of high probability fair value gaps, i.e. they're sitting on a daily wick quadrant, on an RTH quadrant, or something significant quadrant, like this right here, it's a high probability fair value gap. It's sitting on the quadrant of the first presentation. Then your trading will handsomely explode to the upside. The midnight candle. Yeah, exactly. Right. But I see this as the midnight candle open. Yeah, exactly. It bounced off of it. And so again, stack your confluence. But I think the biggest ones is high probability. Same with this one right here. It's super high probability. This right here. I'm going to remove this one, this nested one. But like, look how it's just bouncing off of this. And if you use these bounces, these high probability fair value gaps with a draw, good results, guys. Good morning. Hey, Big Rich, you missed, man. You missed an amazing long. You sleep in? You sleeping in, lost 4R. Speaking about sleeping in, currently I have the 25 Ultra Samsung. I'm a Samsung guy. I was an Apple guy for the longest time. Now I'm a Samsung guy. The new Fold coming out, I might swap in my 25 Ultra for the new Fold 8, like the widescreen. Because I'm thinking about like when I open it up, it'll be like really good for TradingView. Because sometimes I look at TradingView when I'm not trading to see if there's anything like super obvious. And if there is, I just bolt it to my office. So it's a really cool wide phone that I think is going to make charting look a lot easier. So morning quant. We got the boys coming in, the regulars. A 1 to 5 short in Asia. Bro, good job, man. In Asia. Here's a short I tried catching. It failed. It was a break-even trade. I tried grabbing these lows. Didn't work. Recently had a lot of break-even trades. It can be super frustrating. But then I realized what's more frustrating than break even is a loss, and multiple losses in a row. So count your blessings. All right, we've got liquidity above us. See this? Okay, so let's talk about some things you can learn off here. See how we're bouncing off of this fair value gap like once, twice, 3 times, 4 times, and price is hovering. This is not clean. Like it looks nice, but taking longs or short off of this is not recommended. Like usually like you want to see 1 bounce, 2 bounce run. Now it's hovering. Why is it hovering? Sell side has been taken. Or sorry, buy side has been taken both on NQ and on ES, specifically on ES, London highs. And we're seeing this like consolidation price action. Again, it's still respecting it nicely, but like when it comes to like prime, like A plus delivery, you don't want to see something like this, okay? Yes, exactly. We are late. A polite way of saying you missed is what did we miss? You're absolutely right. But all in all right now, guys, if you're looking for a new position, I think it's winning. And again, like please use all this as an opinion. And just in case if I get in trouble for YouTube for making money real time on stream, I'm gonna flash this disclaimer. But if you guys have a bias that's against mine and you're really strongly against it, use that bias. I'm just sharing my thoughts, and all of us are going to have a different lens. And I think everyone here, eventually, through trading, you'll find your own style. And like I have my own style. I gravitate to relative equal highs and lows, London session highs and lows. I look at IFEGs. Like I have a specific 1 minute style. There was some of my buddies that went into, they started off with ICT with me, and then they went into like, not order flow, but volume profile stuff. I tried that. It didn't work out for me. They're like, Dom, like add volume profile to your trading. And it just confused the shit out of me. I always have like a POC that's sitting between like my entry and my target. And I'm like, oh, I should close out here. And what does price do? It just drives through the POC, which stands for point of control, just something that you get in volume profile. And I'm like, man, if I didn't have this stupid volume profile on my charts, I would have made a lot more money. So I just removed it. And you'll see me over the upcoming months and years of just adding and removing things that ICT introduces. I add it to my trading. Does it work? Yes, no, then I remove it. I know of like the midnight opening range. This is really good for London trading. But today we kind of added it and it added confluence to a long. So yeah, exactly. Always do what works for you. Like I used to, and this is where I found profitability. It's when ICT said new day opening gaps, new week opening gaps. Like that was like what, 2 years ago? Like that's when I started making like my first payout after like 6 years of trading. But now I don't really use them anymore. I look at them, I see them. They're usually a draw. And sometimes price bounces off of them. Like you can see here. But they're a minor confluence factor. Before it used to be a major, now it's a minor. And sometimes I just delete them completely. I don't even care about them. I know of them, I know roughly, but I don't like look at them for entries anymore. Same when it comes to first presentations. I use them a lot. Like yesterday's first presentation, today's, I will use that in the session. Right off like 9:30 trading. I used to trade the 9:30 open, and it screwed me over so many times that I just don't do it anymore. I start at 9:50 the earliest. Like that first macro, I wait for a lot of disruption, a lot of chaos. Price creates something clear for me, and then I take it. Do I trade lunch? I do, but it's very specific. And take notes, guys. When we have the opening range, like let's say we open here. Okay. And this is going to be 10:30 onwards, all the way to 11:30, all the way to, let's just say 1. That's proper. If we have a run up like this, all the way to like 10:30, 11, like somewhere within this time frame, like 10:30 to 11:30. This is how you trade the lunchtime macro. Like this is 10:30, this is 11:30, and this is the open. This is gold here, guys. So listen carefully for those that don't know. If you have delivery like this, all the way to 10:30 to 11:30, once it hits a key PD array, I don't know what that's going to be. a daily high, a daily something, relative equal highs, and it starts to reverse around this time, your target is going to be the first. Here it's going to be the low. First high after 10 a.m. on the 15-minute chart. Okay. Easy bread and butter trade. Like that would be your lunchtime macro. Because what does lunch do? It takes away from people that made money during New York. So that's lunchtime macro in a shell. There's 3 rules here. I'm a bit fuzzy right now on them, but when I see it, I kind of know. But it's a push higher without any significant retracements for like the first minimum hour, if not hour and a half, to 11:30. Topic 2 is you take either the first low, like for example, this can be like partial 1. And then once you hit partial 1, like your final target can be the first 10 a.m. after, like the first swing that you see on the 15-minute. This is, guys, really good. So if you guys trade lunch, let's say trade lunch. It's the DXY fault. Yeah. I used to trade Forex. I stopped. I first got introduced to Forex. Guys, I spent, you guys have no idea, so many thousands on gurus and courses and all of this shit. I think I spent 20K in my lifetime on courses. I started like 10 years ago. This guy called Lewis Mocker. He created something called Infinite Prosperity. I joined that. He had all these upgrading courses, like learn how to day trade, learn this new strategy, learn the LLM. It was all bullshit. It was all retail logic, packaged nicely. And then I got into this other guy, and then to this other guy, and then eventually I found ICT. And I just watched all of his videos twice, took notes, back tested, and that's profitability. So that's kind of, that's my little story. And there's no way of taking shortcuts here. To be honest, the only way, guys, you guys are looking for some kind of material, study ICT, guys. Start off with his core concepts, get into his 2022 model, his 2023 model, watch all his videos from 2024, and take an hour and a half every single day and just do an hour and a half. Take notes and then finish. And then within an entire year, you should get through the majority of it and you will be extremely knowledgeable. I'll show you guys my notes if you guys are curious of how they look like for ICT. And to be honest, I'm going to be planning to watch all this stuff once again. Oh, look at this. I found a note. It's called How to Trade the 7 to 930. What's price doing right now? It's still consolidating, so we can talk about some value add items that will make all of your trading better. How do I open up this note? All right, this is going to be it. I'm just going to take a screenshot of it, and we are going to run through it quickly. So guys, right now we're going to do, if you want, feel free to drop off. I don't think there's anything clear right now, but I'm going to tell you guys some of the key things that I've learned from ICT. And this is very important, okay? All right. So I'm just copying things from here, and I'm going to paste it directly into here. Okay. All right. Note 1, guys. Price is still doing nothing. It's consolidating. Okay. And we're leaving the macro. So there's nothing at least for 11 minutes. How to trade the 7 to 930. So this is something that we do on this channel every single day. Like this is what I trade with you guys. Okay. Find relative equal highs and lows or smooth levels from 7 p.m. to 5 a.m. Take notes, guys, okay? Or take a screenshot. Okay? This is what we do every single morning. We run through the higher time frames. If market only goes down overnight, most likely you are hunting relative equal highs. Okay? To be honest, I forgot about that. Okay, but that's nice. Good refresher. Thank you, ICT. Look for what price has done overnight. Look in this range. Okay. So he takes like the low of 7 p.m., the high of, and he looks in that range. So he doesn't look at extremities. He looks things within that range. Pre-session or the first hour of trading for index trading futures targets. What did I mean by this? I don't know. Pre-session or the first hour of trading for index. Okay, I don't know. Maybe after we watch the video. Some other notes. 2 to 5 a.m. is the London kill zone. You want one of your workspaces for it to be blank. It blocks out opportunities. Okay, so here he talks about in this video that if you have a lot of shit on your charts, it can skew your perception of the markets. So like right now I have a lot of stuff. So technically I should have one of my charts that's completely clean. And that's why I have the 15-minute chart. All it has is session highs and lows, but it's relatively clean. It has really nothing on it. 5 to 7 a.m. is dead time. Avoid this area. Okay. First presentation, fair value gap, is after 7 a.m. on the pre-market conditions. Remember, price needs to displace for it to be a first presentation. What is displacement? It runs through a high or a low at a very specific time. The displacement towards the obvious draw. Okay, that's true displacement, guys. Common gaps versus non-common. I don't know what I meant by that comment. If price moves sideways, it probably means price already did what it needs to do. Okay, so price moved sideways because it already did what it needed to do, right? ICT likes fair value gaps higher than 10 handles. This is back in the day when I think price action was like really small, but again, it's a note that I took. If you have wicks on relative equal lows, price may not tag it and stop at the wicks of them. You must grade the wicks. So take this in your notes, guys. And I'm going to do this too moving forward. I'm putting this on a sticky note because I forgot about this. I know of it as per my notes, but I forgot about it. There's so much shit that I does. So I use everything on sticky notes. And where am I? I have to order more sticky notes. On the ground. Right? So moving forward, we're targeting the bodies of targets, not wick highs. Okay? This is going to be TP management. And I'm going to have this sticky note in front of my keyboard for the next 3 weeks. And believe it or not, that's how I ingrain things personally. Okay. So thank you, old note. So you can see here's an example. Using like paint or something, I graded this wick into 4 sections, right? And you can see here price. It hit the mean threshold of this wick right here. To be honest, my notes could have been better. Singular lows can be used, but they need to be dynamic. Example. There's an example here. Now let me give you a better screenshot of the singular low of what ICT means. Are you guys seeing value in this right now, guys? And like this like mini deep dive of key items when it comes to specific concepts of ICT. If you guys don't, I'm going to stop right now. But since price isn't doing much, I don't know what else to do. I'm going to drop off soon, but I want to leave you 100% good. Okay, cool. Good stuff. My goal here is at the end, like you guys just become better. Like if I were to disappear tomorrow, like you guys have to become better traders. Like we're all struggling in this. I struggled way too long in trading. Okay. Here's the rest of the note here. All right, let's see. It might not make any sense, but we'll see what I wrote, like version 2024 of me. So singular lows can be used, but it needs to be dynamic. Example. Oh, see, I don't know what I meant by this here. Singular lows. Is it this low? See, maybe I have to watch the video again. Okay. Use quadrants on the 7 p.m. to 5 a.m. highest high to lowest low. Quadrants help trades. Look, how will the RTH gap form? Where is a new week opening gap? So these are questions that I ask you guys sometimes, right? Like how will the RTH form? So let's now do a case study together. 7 p.m. So the one thing I haven't done too is we're going to use the quadrants. I have to review all my notes, to be honest. And I have hundreds of these notes, not just one, but this is how I studied ICT. You watch his videos at like 1.2x speed, take notes, take screenshots, create detailed notes. Some of my notes here are very poor and I have no idea what this means. Now it's bugging me. But this is how you do it, guys. 7 p.m. 7 p.m. to 5 a.m. range. Okay. For pre 9:30 trading. Okay. All right. So that's the note of how to trade from 7 to 9:30. He had one lesson on it. When was his lesson? To be honest, I don't know. I should have wrote down like the video time or a link, but it's somewhere in his channel. But now we're going to basically do what he said. So we're going to take 7 a.m. Sorry, 7 p.m. low. This is me trying to trade stupid London, stupid Asia. I regret trading Asia. Here's a long that I took. I got broken out at break even there. And then I tried taking another long here. Got broken out at break even. It was like all these break even trades, but my overall bias is right. But anyways, ignore all that. That was me just being greedy in Asia. 7 o'clock. So here's the low at 7 o'clock, guys. All the way to what? 5 a.m., right? Is that what he said? So it's here. That's the highest high. Now we're going to drop quadrants. So let me clean up my charts a bit here. Thank you, RTH range. We can remove this. Okay, we can remove this. All right, so we drop quadrants now on this. Oh, I lied. Look, the high is actually there. So that's the range. Okay. You drop your quadrants. And you'd use these quadrants from 7 to 9. So let's see what it did here. This is funny. Look what price did here before the run. It hit literally almost to the tick here. The 50% of the range from 7 p.m. to 5 a.m. Interesting, eh? Just take a note here. I wasn't looking at this at the trade, but that's interesting. So that was an additional confluence factor. We've got this area right here. This is the upper quadrant of like that range that IC talked about. What's sitting on it? This fair value gap right here. Look how nice Pricely rejected it, right? So you can see here, using this range, there was trading or resistive price action around here and around here. See? Interesting, eh? The next level is here, right? The highs of the range, which is our higher time frame liquidity targets. But that's some additional. So we have two key things that I didn't do before that I forgot about. When it comes to targeting like wicks or like highs, I'm not like maybe you can do mean threshold of those wicks, but I think bodies is safe. And number two, we're going to start incorporating moving forward the range from 7 p.m. to 5 a.m. We'll be using those quadrants, and moving forward, you'll be seeing me create high probability fair value gaps around these quadrants. So I learned something. I reminded myself of something. And what else I see say? If we're moving sideways, it means that we've already delivered to targets. We've delivered to targets on ES, you can see, and on NQ, and you can see we're moving sideways. So some good stuff. Now let me look at the chat here, guys. Sorry, I've been completely ignoring you guys here. Also IT. So Hey is also an ICT based trader. I can pass eval easily, but somehow I blow up on any advice. I know my mistake is high contracts. All but now my 4 funded Apex accounts at $500 last limit. How do I survive now? Okay. They're 4 funded. So this is what I would do. I would completely ignore that you're in drawdown. And it's going to be hard to do, but completely ignore that you're in drawdown. And yeah, price is still rubbish here, guys. But answering your question, hey, ignore that you're in drawdown. Take that 500 and I would break it down into 4 sections or even 5. And for the next couple of trades, only risk $100. So assuming that your strike rate is higher than 20%, you should be able to recover. Be very selective. Make sure those trades are at least 2-to-1 RR. Like trade them as if like you're not down 500 or 500 left. So 100 per trade, 2-to-1 RR minimum, and only trade when you have a draw of liquidity. That's how I do it. Oh, thanks, Gwant. Yeah, and like here, I'll show you guys how my notes look like if you guys are interested. So here are all my notes. Well, this is just some of my notes that I have. So I have and maybe after like a good trading session with you guys, I'll pick one and we'll go through it together. So it's a good reminder of me again, because I'm selfish too in some ways. But we're gonna pick one of these topics. We're going through them. Like something that I want to study again, and I know of it. It's the 2-stage delivery. See, trading FOMC with 2-stage delivery. That's something I need to review again. I don't trade FOMC, but I know it's 2-stage. And for example, last week, I think it was FOMC, and some of the traders like Dodgy and stuff, like they took the 2nd stage delivery. And I'm like, I know of it, I just don't remember it. So what we're going to pick some of these items out, some 2024 mentorships. But this is basically some stuff like New York lunch algo delivery. You guys want to review this quickly before I drop off? Who here wants to learn about the New York lunch algo from March 11th? If I get one yes, I'm doing it. If not, we're closing off the stream. Yes. All right. Okay. Let's open up my notes here. All right. So for March 11th, it looks like he didn't give us much, to be honest. This is all I have in my notes. I have a better note somewhere else. I'm going to find it too. This is all I pulled out from him using previous day lunch window. So here's the lunch window right here. If you have a reversal after this is a great thing. Okay. So if you use the previous day lunch window, if you have a reversal after liquidity has been taken, take the inefficiency right before that liquidity, carry that into the next trading day. If it trades into it, it can land into a short. Okay, so this is golden, guys. So let me open up the picture here that I took a screenshot of so that we have a bit more clarity here. So here, let me explain it for those that don't understand it. Okay. Hopefully this is big enough, guys. And you know what? Let me get into more blankness here. There you go. So you guys don't get confused. Okay. This right here on the left-hand side of this specific day, we had lunch. We had a lot of liquidity form here. And right before we tagged it, which is this candle right here, let me use my pointer here. This is the candle that drove liquidity. No. I think it was a candle. Oh man, this screenshot isn't even that good. Let's zoom in more here. So lunchtime liquidity was formed. We drove higher, and this was the fair value gap here that formed right before the sweep. Okay. You can see here on the downside, price used it, but he's like, take this. If there is something like this. So condition one, and I'm going to write them down for you guys. There has to be liquidity formed at lunch. Number two, use fair value gap that broke these highs. Use the fair value gap that formed before breaking these highs. Okay. And then when do you use it? Next day, lunch. Nope, wrong. It can happen. It's just a really important fair value gap. And you can see here on the next day how price drove into it and then it collapsed lower. So, and we'll find an example right now before I hop off, but fair value gap that formed before the lunchtime liquidity sweep, extend into the next day, and you can use that as confluence. That was a sick find. There's very little about the lunchtime, so let's see if I can get any examples here. So lunchtime highs here, liquidity hasn't been taken. It's been taken. So this has never been taken. We got to go back further, guys. Just looking for examples here at this point. Lunchtime liquidity hasn't been swept on that day. It's a very specific okay. You might have something here. So like this is how I backtest. This is from the previous contract, but so be it. Lunchtime liquidity. Technically, it hasn't even been taken here. See all these highs here. I was gonna use this right here as like that fair value gap that you take forward, but it's not in the conditions. Lunchtime liquidity. Again, like you have to back this. It's a very specific setup that he talked about here. But I don't see anything clean right now. Go farther. Lunchtime liquidity. Never swept here. So anyways, it's a concept he talked about. Hopefully I screenshotted what I shared, but have that in mind. If we have using previous day lunch window, if you have a reversal after liquidity has been taken, use that fair value gap and you push it forward. Okay. So that's it, guys. I'm going to close it off here. I'm going to grab some breakfast and I'm going to start prepping for trading lunch maybe today or half an hour after. But it might be a small RTH gap. So watch out for that. If it's a tiny RTH gap, wait till 10 o'clock, guys. That's the advice I'm going to give all of you. But without further ado, it looks like, oh, hold on. Wow, those are some awesome notes. Maybe more often. Yeah, we can do that, Martin. We can definitely take like 10 minutes after every stream and just go through like a note or two. And we'll all take notes. I'll remind myself of the thousands of hours that I watch and what really stood out to me. Is it based on a day-to-day trade setup or it could be used as a future setup? I think it's a future setup, Big Rich. So like the next day, at least like that's the example that he gave in that lecture. What indicator do you use to show the macros? It's by 2 degrees. It's called macro tracker by 2 degrees. So if you go into your indicators, you type in macro tracker, it's by 2 degrees. Believe it or not, I can see it here. Right here, this one. ICT macro tracker 2 degrees. I am in. Quant is in for the recaps. 10 minutes is perfect. Okay, good stuff, guys. Okay, so today we all learned something. You've experienced, a decent trade to the upside. We learned something. I think it's a win-win for everyone, even if you took a loss today. So, guys, take care. If you guys enjoyed the stream, feel free to like. And yeah, if you guys haven't heard, Tradecopia is my current trade copy that I'm using. So I'll make a video about it soon, but it's better than Tradesyncer. It's just a bit faster and a bit cheaper. Take care, guys. Chat soon and safe trading for the rest of the day.